a capitulation before the big rebound? This is the big question, the billion-dollar question that is everyone's mind right now. Now the technicals are very clear. We're going to see a rebound. Why? Because most of the time when the technicals are near the bottom, based on history, based on chart pattern, based on probability, a rebound is always around the corner. But the question is, will there be a capitulation? This is something that we have to take note before we plunge into the market, because I know that many people now is trying to buy the bottom, and I would like to tell you this is pretty scary. Let me share this more with you very shortly. But once again, disclaimer apply as usual, and of course, thank you AIMS for the kind sponsorship. Now, JP Morgan again, alright, JP Morgan comes in and they are saying that now the condition needed for a stock market bottom are forming, as investors are getting overly bearish. Now, we do know that every time when investors get bearish, it's a good time to buy, but it really had to depend. Because back in 2020, right, when the market dropped by 20% from the high, the market was nowhere near the bearish field, okay? In fact itself, right, when the market plunged down by 30% to 40% during the sell-off in 2020, the market was like, okay, they were stunned, but they were not like overly bearish, and of course the market rebounded pretty quickly. So that's the difference here itself. Okay. So anyway, we all know that Marko Krnanovic, he has been a bull from the day one since this year. Every time he'd been calling for buy. All right. Now sometimes he was right, but majority of the time he was wrong, because this year is down by 20%, right? So Krnanovic basically says that there is a chance the market should be bottoming out soon, because there's a peaking inflation in his opinion. That means that inflation has peaked in his opinion. Then the extreme depressed investors positioning now probably is a good time to enter the market, and obviously he says that the valuation now is very attractive. So all these are the reason for calling for a buy. And to him itself, right, the AAII, which is one of the very what they call sought after investor indicator, is now showing that only 17.7 of his correspondents were bullish on the direction of the stock market in the next 6 months. So which means that, right, people now are very bearish, okay? They are very worried. And this is something that when you have more than 80% on one side of town, usually the market will rebound, right? So this is another indicator used by Fundstrat, where this guy Tom Lee used. Another one is the CNN Fear and Greed Index, which I use to check out the market. And oh my god, it's at 18 right now. Yes, 18. Now, just about 2 weeks ago, it was at 50, remember? And I was telling you guys that although it's at 50, be careful. I believe that the market will come down. And at the time itself, the S&P 500, the Dow Jones was back at 32,000. And many people doesn't believe in that. And now the market has come down to below 30,000. And that is where now the index is at 18. But if you look back at the timeline, it's not really at the lowest point. Remember, back in this May-June period itself, right? The index drove down all the way to this 5 or 8, I can't remember, and that was the best time to buy, because that was where the market actually bottomed out. Let me just show you the market back then. Okay, take a look. Now this is where the sentiment was so bad back in June area itself, and then that was where it was a perfect time to buy, because everybody was worried, and of course the market rebounded all the way, and the market from this point here rebounded more than 4,000 points in 41 trading days. Okay, so that was what happened, and I think that if there's any chance we can see this again, this means that it's a great time to buy into the market. But now we are seeing that it's kind of 18, but the number here is at 5 or 6, if not wrong. Then we have a problem. So let's check the thing clearer. Let's take a look at the market right now to see it clearer. Okay, there we go. All right, so let's take a look here. Oh, oh my god, it's not even 5 or 8, it's at 3. Oh my god. Okay, 3 on May the 12th. May the 12th. When was May the 12th? Let's take a look at the chart right now. May the 12th. I think it should be here then. Okay, yeah, okay, May the 12th. Where are you? Okay, here. Okay, so that means that right here is May the 12th. That was where the indicator was at the lowest at 3. Okay, and of course the market rebounded. Now you can see the market hits the 85% mark beautifully, and of course hit the trend line also at the same time. That's where the market rebounded. And how big was the rebound? Let's take a look. The rebound was pretty good. It's about 1,400 points in just 3 to 4 trading days. That's brilliant. Okay, The thing is, there were this point whereby the market supported by the trend line and by the 85% mark. And at the time itself, right, the inflation was not so bad. At the time itself, the interest rate was not so high. Now we have a rather high inflation. We have the Federal Reserve going to hike more. We have the current situation now. The market is beneath the 80% mark, which is a bad territory, and it's also beneath my trend line. So this is going to be a bit different from then, okay? All right, so what happened? Let's take a look here itself. So at the moment now, we can see that, okay, the momentum is bad, okay? The last time we see something like this itself was back in June period, whereby you can see that the moving average, the 125 moving average, and the S&P is pretty far away. Now, usually if the S&P 500 and the market is too far away, they'll come together and close up. You see that? You see that? Like example like this is like they are far away, and then after that later on they close up. Okay, so the question is, will there be a close up? If there's going to be a close up, that means the market must rebound back to 4,000 points. But of course, history has shown that it can widen to a certain level. That is where my concerning is. All right, now look at the current stock price now. The market is at a lower level, right? Because the current market S&P 500 is now trading lower than the last low, right? So by right, the strength should be lower. So, but then again, the strength now is actually higher. So that's two-way look at it. It could be a positive diversion. That means that the market has hit a bottom and there could be a strong rebound soon. Okay, that's a positive light. But the negative light means that the market got a bit more to go. And this a bit more to go can be a capitulation, whereby it just sell down so hard and so strong and so fast that it freaks everybody out and everybody dumb, and that is where they'll pick the bottom. Yeah, so that is another view here. So look at this. This is a Macmillan this volume summation index. Also, we have the same thing itself. We are slightly higher than the last time, and of course the put call options at a high level. Now, of course, usually if the put call options at a high level, the market will likely recover, right? So we've seen this before. But if the market want to go for the broke, right, they can really do the capitulation, and that's why I'm quite fearful on this. And of course, look at this. This is the market volatility. Currently now we are at 32. The last time we saw this is at 34. On average at 34 to 36, okay? So which means that if the market really goes to 34 to 36, then maybe that is the capitulation that I mentioned, and then that will be a good time to consider buying. Now, the safe haven demand now between the stock and bonds is pretty flat, so just give it a miss. And of course, now people are buying into junk bond because the current bond now, even though it's paying at 3%, people are worried. People are worried. So that's why the 2-year and 10 years continue to invert, because people doesn't want to buy the longer term bonds. And that is the big problem here right now. Okay, so I give a very good coverage on the CNN Fear and Greed Index. Yeah. Okay, so the MOVE, the index is what is this all about? Now, the MOVE is it's an index that measures the bond volatility. All right. Now, the last time we saw this at 160 was back in 2020 March, and at the time the market was crazy, and then after that the market rebounded and go higher, right? So again, could this tell us that we should see a double top soon? Hence, therefore, the market is near rebound. It is all possible. Okay, it's all possible. Now look at this. This is the VIX versus the VIX inverted versus the S&P 500. Now, same thing again. Earlier I just mentioned, right? If the two indicators are, the two indexes are too far away, usually they come to a point whereby they will converge into one. And usually when that happens itself, right, the market will be moving to the next bigger movement. And you can see almost every time it will converge eventually. You can see that even like this one itself, they are so far away. Can you see that? But eventually they converge. So now the thing is this, yes, also converge, okay, recently. All right. So it's considered as back to normal. But as another way to look at it now, that means that a very big movement is going to come very soon, okay? Now, of course, on the positive side, the market should rebound. It could be going back to 3,800 for the S&P 500. But on the flip side, it can also go down to 3,200 to 3,300 for the S&P. So that is the point that I need you to be very careful. So I'll write down for you guys on this note here as well, right? So the thing is this, if all is good, we can see the market going back all the way to 3,850. But if things is bad, then we're going to see the market going down to at least 3,400 level, okay? So that means that we're going to see big movement coming in. It's either like upside of 200 points or downside of 200 points on the S&P 500, because this is something that we must take note of that, okay? Then because of all this thing right now, let's look at the other indicator. Now this S&P 500, whereby stocks are above the 50-day moving average, and we are now at the very low end. And of course, every time when this happens itself, later on, the market always rebound. Let me just show to you now. You see that again? This is the S&P 500 over here. The market rebound, okay? It happened again, the market rebound. It happened again, the market rebound. So which means that we are now very, very, very near to a potential technical rebound soon. But the thing is this, I said again, there are so many things that is not really at the same aligned right now. I just feel that there could be a potential capitulation in like next few days across the weekend potentially, and then that's when everybody has freaked out already, then maybe people will really come in to buy. Now do note yourself that some mutual funds gonna basically do some portfolio arrangement today and tomorrow, and I believe that that could actually be one of the catalysts to bring the market down before rebounding. Now this is the S&P 500, the S&P breadth, and there's some of stocks that's basically at RSI below 30, right? So same thing again, when you have this, where the common figures here is right, it's near about 375 to 380. All right, usually that is near a market bottom, okay? So what I'm trying to say is the market probably is near a bottom, near. Now, of course, the market, this indicator itself can go much higher. So which means that if the thing does go much higher itself, the market may have to fall a little bit more. I think that we are near about a bottom, okay? So all these are very powerful tools you to get from the in-stream media. So using an average percentile of 16 sentiment indicator, all right, this is really impressive, 16, all right? Let me just do some changes in the coloration. All right, 16 of them, let's look at it, okay? And it's not surgical, it's just not surgical perspective, but it's just an idea. Now look here itself, you can see that we are now here. Now the last time whenever it goes down itself, right, you can see that was where the Lehman Brothers happened. And this is where it happened, whereby the market was recovering on the bull market towards upside. And this is what happened again before the Jerome Powell comes in and before election. So the thing is this, every time when this index basically goes down, it's quite clear that a bottom is around the corner. But again, I repeat, the last 14 years or so, the market has been bullish because the Federal Reserve have been all the way involved. So as long as the Federal Reserve is involved, and when the market hit a technical point, right, we can see a potential recovery. But this time now, the Federal Reserve is not around, and even though the indicators are calling for a buy, we just need to be slow on this and consider that let the market die first, then at a good price, then jump in to do some collection, okay? So this is the just ignore the title. Okay, this is not, the title is wrong. Earlier was this technical. Okay, so on this title itself, right, this is coming from this Goldman Sachs. So Goldman Sachs is saying that they are expecting UK Euro, right, to be bad. Okay, they are looking at the further downside, okay, for Europe actually. So they slashes the target price and EPS for Europe and thinks that the Swiss bank market has not reached a trough yet. So they are still looking at a potential 8% down the road. Okay, and it's something similar to mine. I said it yesterday during my this video on UK. I'm saying that likelihood will see about 8 to 10%. So it's pretty in line with this this Goldman Sachs right now. So traders, you need to really be careful, and this can go pretty bad. Yeah, so that's something that I want you to take note. Okay, now last one, this is something important. This is from Nomura SPX sentiment, their own indicator, says that it's at extremely low level, and of course some pain is coming in. Now, when pain is in, then of course people get out of the market, and every transaction is always a buyer and a seller. So if the sellers are coming in, the retailers coming in, who are the buyers? Obviously the boys, right? So it's without a doubt, I believe that the change of hand is going to happen very soon. So all we need to do is just be very patient, wait for the extreme point to come, then pick the bottom. I think that will be a better way to make money from this market. All right, so let's take a look at the chart right now and see whether what I say is right or wrong. All right, so let's take a look here. This is the this is the Dow Jones chart in long term, okay? And we can see that the market has been behaving nicely for me. And of course, the question is this the time to buy? Because the RSI rating is at 23. Oh my God. The last time we see 23 itself, right? Let's take a look here on my chart. Don't have, okay? That means from this year or the last year, we don't see it. If move back all the way, even 2020, you don't see it in November. But of course, back in the February month, that was where the RSI went down below 30. Okay, the lowest it went, let's take a look here. The lowest it went was somewhere around here. Let me just bring it in for you right now. Yep. The lowest went about 15. Wow, almost half of the 30 average. Okay. So before you jump into conclusion, let me just show you something very critical. Let's take a look here. Now you see that when the market was coming down and it was below 30 mark itself, right? The Dow Jones was just here, okay? The Dow Jones at the time itself was still trading at about 27,200 level. Then after that, even though the RSI is at 30 level, which conveniently people will say it's a good time to buy, right? The market didn't really do that. The market slammed down. The market went down by another 9,000 points over the next 19 trading days. Now I want to bring this in right now. You take a look here, guys. We don't have a pandemic. So not very worried on this. I just suspect that we may see something like this. Okay, take a look here. The market RSI basically hits 30, right, and below. Then the next few days, the market really went down by at least, in the case of this, 2,000 points. Okay, 2,000 points. Then the market actually staged a very strong recovery of 2,300 points. So this is the capitulation that I've been saying about this, okay? And if you look carefully, okay, this day itself, right, this is actually on the 28th of February, this is on the 27th of February, this is like 26th of February, and this 25th. So it happened across a one whole week, okay? And the market just sold down all the way until Friday, okay? And then after that on Monday, yeah, the market actually rebounded, okay? So if you were to ask me, right, I kind of believe that this could actually be happening, and the chart pattern has a little bit, okay, similarities right now, okay? So that is my view on the Dow Jones using the this conventional chart. Okay, let's look at this this KFC line, so to show to you something very important. Okay, so let me just bring to you right now. Okay, so the Dow Jones KFC point was here, and the market hits this thing and couldn't go higher. It went down. Okay, fine, this is done. But NASDAQ is the one I'm looking at. Look at it, guys. The NASDAQ is bad. The NASDAQ itself, right, I told you there's this very important technical point, okay? And the market basically closed below. And currently now it's going down, and it's going to break the last 3 days low, right? So if it does do that, then the NASDAQ could go all the way down to 10,832. And this is something that I've been saying. So traders need to be very, very careful on this, okay? Now let's look at with my TWB chart right now to see what can we offer. Okay, so, okay, wait a minute. Just do some refreshers off. Okay, so what we have today is bad. Okay, today is a doji directional day, meaning, right, the market would be moving in a directional form. So obviously it's all right. If the market trades below OP today, then the downside could bring it down to 28,669 level. And if you actually notice this particular figure, 28669, is actually pretty near to my earlier target, which is like, let me bring the Dow Jones in right now. Hold a minute. Okay, remember this? I said that, right? If the market, if we go down further, all right, based on the next 5% move, the downside could be all the way to 27,715. But the between 75% to the 80%, the midway mark was usually the what they call like a pit stop area. This number is 28,639. Okay, 639, right? So if you remember this one, what I said about the market too. So you can see right here, 669. So 639 and 669 is like 30 points different. So that means there's a very good chance tonight we might be able to see some selling that may bring it all the way down to this figure at pivot 2. Then we can probably see a rebound over there. Probably, yeah. So traders, for today is all right. As long as the market stays below OP of the day and below MLP, seriously, with the KSI and KRW, both of them are red. Downside potential is pretty high, okay? Downside potential is pretty high. And of course, you can see that the market went up to MLP, couldn't go higher, and we know that if the market stays downwards and stay below OP and MLP, downside potential is usually happening, okay? So there's one way to look at the Dow Jones right now. The NASDAQ, as I told you, I'm pretty concerned, and because NASDAQ has a new BMB, big movement bar, that means the downside could go to 10,839, which is the level that I just mentioned that it might be going. So you look at the thing again, and I bring in the NASDAQ in again, you can see the incredible what they call pattern here itself. Okay, hold on, this is not the chart there, moment. Oops, I think, okay, here we go. 10,832, right? Because that is the level that I calculated, 10,832. And now we have this thing here saying that 10,839 is the BNB extension minus 1 times 1. That means there's a very good chance the Nasdaq could be going there if as long as it breaks below 11,000. Okay, and of course 11,000 is a big psychological level, and if the market breaks below it, that will be bad. Yeah, that will be very, very bad. S&P 500. Now S&P 500 at the moment has a new BNB and is now have tested below the support level. 3525 will be next. Now that means that now at 3622 we are about 100 points away. Now is it possible for the S&P lose 100 points tonight? Now it is possible. We have seen it before, but maybe not today. Maybe tomorrow, maybe another day. I don't know. But the thing is this, both KSI and KRW are red, so the selling is still going to happen, okay? So be very, very careful. Hong Kong is bad, okay? I already told you guys Hong Kong is on a downtrend, and you can see very, very clear that is happening right now. Let's compare to China market. It's now down, but it's like off the lows, and it's still staying above 13,000, which I kind of believe that it might be tap out later, yeah? But nonetheless itself, right, look at Hong Kong now. Hang Seng is going to go down, and I believe it's going to test 17,299 because that is the pivot 2 level. And very clear, it's below MLP today, so therefore once you open, you just have to keep to the sell side, okay? You just have to keep to the sell side. And of course, if you look carefully at the chart once again, you can see that the market really hits the KTR plus 1 level, couldn't go any higher, and then that was where it breaks down. And I believe that now the selling is going to continue again, because from the way look at it, you can see that even though the boys are buying, but the selling has continued to flush in, okay? So in my opinion itself, the selling should come, and traders just need to be very, very careful, because if this selling comes in, it might be drastic, okay? It might be drastic, okay? I'm not saying that it will, but it might, okay? So you have to understand that I'm trying to make sure that I don't oversell this, okay? All right, so that is something to take note of that. And of course, let's look at the other market right now. Let me take a look at Nikkei. Now, Nikkei is bad. Now, Nikkei has sold down pretty badly. Now, Nikkei, you can take a look right now at the Nikkei chart. This is the Nikkei right now. Now, Nikkei this morning tapped the MLP. Supposed to go higher, right? But we always say this, if the market goes up above MLP and pull back, it's a sell, right? It's a great sell, in fact. So let's take a look at the MLP and I'll show you how it looks like. Okay, so this is the 5-minute chart, and you can see that the Nikkei basically was above OP for a while. It went above MLP. It looks good at one moment, okay? Then the ding dong happens, okay? And it couldn't stay up too long. You can see right here. And once the market loses the MLP, that's it. This is the first sign of trouble. And once it goes below the opening price, there's nothing out. You have to take a short position, and the market just plunged, okay? The market just plunged, okay? And now, not only that it's going below P2, it's trading now downwards now. If the market stay below P2, usually there will be more selling. So traders, be very, very careful, all right? The Nikkei can go down further, and if you look at the chart point now, usually you go for the next technical point. The next technical point at the moment now should be this. Let me just put it in for you at about 25,770. That means that we're talking about another 200 to 300 points more. Okay. Now DAX, I can't show DAX right now. It's not really open. It's not open yet. So wait for a while. And crude oil. Now crude oil is really, it's near to the point that I like, because at $76 as well, I told you before, is a strong support. Now, there are many KCB here, meaning technical point that is supposed to be a buy. But if the stock market is to come down and the economy at the same time is coming down, meaning growth is an issue, then there's a good chance that the energy prices is going to go down further. But if you look at it on the other side, that means that if the energy price is coming down, inflation might be really peaking, and therefore, if there's going to be a technical rebound in the near term, it could be big. Because why? The market is like, okay, maybe it has peaked, so let's just buy something. So you can see how it goes like a 4-dimensional jigsaw puzzle. So if the energy price go down deep enough, and we saw all the sentiment earlier itself is all at the downside near the end, whereby people are freaking out totally, then a capitulation move might be the essential catalyst to make the market rebound. All right, so you understand my point? This is something very powerful here as well. Okay, so that is crude oil. So I still think that crude oil go down. Maybe you will see $74. Wow. Okay, no buying yet. Wait for a while. I've been telling you guys this. Don't buy crude oil yet. Give it for a moment. I will tell you. And from the way look at it now, the KSI and the KRW are both red. no good, okay? More selling, okay? Stop there, don't enter the market. Yeah, I know that a lot of people are calling for buy, not the time yet, okay? Now, how about gold price? Let's take a look at gold now. Okay, gold itself, okay, gold at the moment now is very, 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 very near to my 1620 target. Now, the low itself was 1622. I believe that gold 1620 will be tripped, okay? And I think that there could be a force, it could be a move down all the way to 1612. That is the pivot 2 level. At the moment now, my KSI, my KCX, both of them are pretty on the downside, yeah? So which means that the selling will likely continue, okay? The selling will likely continue. So traders, be careful, okay? Because things can get pretty nasty here, okay? Just give me a moment. Okay, just give me a moment here itself. There's some technical issue here. Moment. Okay, let's continue. All right, then how about silver? Let's look at silver now. Silver. Okay, silver is also coming down. Of course, undeniable. I mean, like, I was pretty bullish here, so when the silver was just hanging around this area at $19, but I did mention to you guys, if $19 break, it might be coming downwards, because you cannot, like, you can't go against the whole world, right? Especially if the dollar is so strong right now. So now what's happening is that today is a doji directional day, hence with the KSI and the KCX are both on the downside. There is a chance to see this silver coming down to roughly about 1790 level. Now, of course, if the market, if the silver continue to go through this because of the potential capitulation I mentioned, then 1730. So put a buy position at 1730. I think at 1730, this price is a good price to just consider to just buy, you know, to keep, okay, at 1730, okay? So I just tell you that 1730, consider, okay? And of course, must do your risk assessment, yeah? Okay, how about this Ethereum, right? We're wrapping up. Ethereum is a doji directional day, hence therefore, if the market stays below P2, which is now doing it, the selling will come, okay? So which means that we will be seeing 1247. And if the thing go crazy, we may see 1192, okay? Do numbers for you to watch out for. I really tell you this, cryptocurrency, don't touch. It's a winter period right now. We will see more selling, okay? And last but not least, I'm a big advocate on this. I strongly believe that Bitcoin must come down to 16,000, okay? I've been saying this for the longest of time. I'm not afraid to tell you this. I strongly believe that Bitcoin will see a flash crash pretty soon. I don't know when, maybe like this week, next week, whatever. But once it go to 16,000, that will bring the stock market down. It will freak some people out, probably Michael Saylor, but then that will be a good time to buy, okay? That will be a good time to buy for a technical rebound, okay? Because I think that this number itself will freak everybody out, and that will be the best time to enter the market, okay? All right, I've given you enough. Make sure that you know what to do and score well. All right, this is Cal signing off. Bye-bye.